Hi, welcome to the market alert for Friday, the 27th of October 2017. So yesterday, starting off with the pound, we see the market sort of drifted lower, waiting for Super Mario to speak, and then just after the euro and the pound moved lower when he said that he wasn't going to reduce the QE until the end of the year, and then starting from January is going to go down to 30 billion a month instead of the 60 billion that he's been printing for goodness knows how long, which was going to be a temporary measure as well. So possibly like the JFK the documents that were going to be released yesterday didn't get released. Don't be surprised if Draghi changes his mind at the last minute and we don't see the 60 billion reduced to 30 billion in January. It could even be increased. So just take it all with a pinch of salt when you hear these things, because let's face it, since when has any politician or central banker actually honoured what they were going to actually do? Right, daily charts, you can see the market's continued down on the overnight. Let me just check this just to make sure that this is correct, and let me just clarify this here. Yeah, that's fine. Just wanted to make sure that this bar is the right bar. So some selling around in the pound, and of course you've got all the Brexit nonsense in the background as well, with there's going to be a deal, no deal, and all the rest of it. Not really kept up to speed on that. It's reflected in the pound, and you can see there's a sideways move, a lot of indecision, and no doubt relates to that as well. News for today, what have we got? Only the US advanced GDP, 1.7 previous 1.0. That will be an interesting one. That will give a Dow a boost if it comes out at 1.7. Advanced GDP 2.6, interesting. Quarter on quarter is an interesting one because it's coming out the same, and revised consumer sentiment is down. So a mixed bag there, but no doubt there'll be enough to keep the Dow moving to the upside. And just bringing this forward a bit so you can see we're going back. You can see there Draghi's comments that were made. Market dropped down a bit. Then there's the relief that he is going to continue to print, even if it's a small amount, so they can keep funneling it into the markets, creating the biggest bubbles that we've ever seen in stocks, bonds, housing, and no doubt it will continue as he continues to keep the printing presses running there. And this is why you've got this horrible sideways move in the main session, because all they did was just bring the market up, as I said in the note that I sent out, and then they'll keep it sideways, and that's exactly what we've got here as well. And given the news that's out today, you can expect more of the same as well. So not a lot to report on the Dow, unfortunately. You can see it's going into a sideways move. First time I've had a sideways move consolidation area following the up move all the way through September and October, more or less. I said at the beginning of the month we would go out with a bit more of a bang, but it doesn't look to be the case at all. They've done exactly what they've been doing for the last 10 years, and that's bringing the market back. Any sign of a down move, now even on an intraday basis, they're bringing it back. In order to move higher, and no doubt they will, to get to the 23,500 level, they've got to take out the 23,485. And you can see there the 76% is giving the market a bit of grief at the moment. You see 2 days yesterday in the overnight market heading towards those levels where it's been a bit sticky, but the GDP figures come out better than forecast today. That will just drive it through this level. That said, let's have a look at the implied volatility. Also, even the promise of further QE from Super Mario, we see that the implied volatility has moved higher from 9.92 up to 10.41, even though the market has continued to be sideways to higher. And again, going back to what I said the other day when we had the down day of 200 points, this is not right. It should be the implied volatility should have moved down in this direction, but it didn't, given that the market moved higher yesterday. So there is still some uncertainty about all of this. According to the implied volatility, it's showing that these options prices are still being marked up because of they're not happy about something, what it is, apart from obviously it's all overbought. But there's something that they're not happy about because they're still marking up the option premiums, given that the underlying market now has the excuse to continue to move higher thanks to Draghi yesterday. So interesting to see how this market is going to pan out today, because we've got this conflicting implied volatility with the underlying market, but we'll see what the GDP figures come out. But let's see what happens in the pre-market, the session. At the moment it's very quiet, but I don't think it's going to be too long before we do see a change in activity. There's something that doesn't feel right about the whole thing. It's gone from there's certainly the relationship between the implied volatility and the stock market. They should be inversely related, and yet they're going in the same direction. So something is afoot, but who knows? They could probably get through it and then continue to move it higher. I mean, they certainly want it higher. They've got to keep the illusion alive. But it could be just some event that comes out of nowhere that sends this market spiraling. But there is, like I say, keep an eye on this, because this one is an interesting one, because this is unusual for this type of relationship where the market moves higher along with the implied volatility. Right, that'll do it for this one, reporting if there's anything to report in with. Other than that, as ever, thanks for watching. See you in the next one.